Welcome back, everybody, to the FFC podcast. We try to talk about different financial topics, whether it be investing and trading, which is my expertise, or try to invite guests on here in order to talk about different topics that I'm not too familiar with, whether it be credit cards, housing, even longer term investing, having experience in that, as you've seen in previous episodes of this podcast. Today, we're going to be talking about emotions. Previously, we already talked about emotions with the kind that are out there. I forgot to mention a couple that we will get into later. But today is going to be specifically speaking on how to deal with those emotions. Because emotions can lead to bad decision making, especially when investing. It's very bad. Because if you try to go in too hard, too heavy, you could end up causing yourself to lose a lot more than you anticipated, further making emotions worse, further making you want to be able to trade, further making you down and down on the port. It's not a good cycle to go through. So it's a good thing in order to realize it sooner than later. Not only that, but try to figure out how to deal with that. We're not going to be going in any particular order today, just going to kind of briefly go over a whole bunch of different ways and strategies in order to fight these emotions. Stuff that I've done, stuff I've heard from other people that work for them, and again, like I said, we're just going to run through it in no particular order. First of all, plan your trade and trade your plan. That's like probably the number one. Happens to be the first one, like I said, no particular order, but that's number one. You don't need to know if you're with regards to trading as well as investing. You need to know when you're going to get in and when you're going to get out. If it's investing, if you're DCAing into the markets, every Friday or every day you get paid, you're going to put a certain amount into the markets, same time, same exact time. And if you happen to sell, trying to play these market cycles, kind of like how we went through. We had this bull run after COVID. We might get a recession here in the near future. You might be planning on selling here soon. You need to know when you're going to get in, which is basically DCing all the way up. You need to know when you're going to get out, which is basically here. We don't necessarily know when, but once you hit a specific profit targets, when you want to get out. And that includes also stop loss, position sizing, and be aware of general stock news as well as just general news in general. It's a lot of generals. Whether it be with FOMC meetings, whether it be presidential speeches. Tensions with Ukraine and Russia, you just need to be aware of what's going on around you before you even try to get into something, because you could easily screw up a play by not knowing what's going on. Another thing is out of sight, out of mind. If you are investing and you're kind of DCAing into the markets, it's wise to either delete the app whenever you're not using it, or having two separate accounts between your long-term investing and your trading account. You might not be that active on either one, but seeing your port go red is definitely going to screw with your head. So if it's out of sight, it's going to be out of mind. So another one is make a list of rules that you want to stick with, as well as mistakes you've made in the past. This could be anything from you won't trade whenever you're too stressed or you haven't got enough sleep, because again, if you're imbalanced, emotionally, mentally, it's going to make you to make bad decisions, which will then lead to emotions. So it's just a cycle you want to stop from the beginning. That might be one of the rules you might want to have. Another one is maybe like you don't want to trade the first 15 minutes of the market open, just because how volatile it is and how much fakeouts there are. That might not be something you want to trade. Another thing might be have a trading limit. You don't want to limit how much times you trade in a day, in a week, in a month. There might be another rule, such as like if you take 3 losers in a day, you're not going to trade after that, or break even trades. You're not going to trade after that. You realize that you've been screwing up. And you want to stop yourself before you end up making too much losses. It's just a whole bunch of rules that you could write down, and from there you have them on sticky notes. You review them each time before you actually get into a trade. That way you're aware of mistakes you've made or rules that you have going on, and you don't want to repeat that. You don't want to break your rules. You want to be aware of everything that's going on. Another one might be a trading journal. It might sound foolish, but even like a personal journal would be an interesting way to get through emotions as well. Because a lot of times you don't realize that you're bringing emotions from outside things into your trading. Whether it be pressure from your bills, you're really trying to force these trades because you need to come up with a certain amount of money, which could lead to losing money. Not only that, but if you have a bad relationship with your spouse at the moment, or your partner, just because y'all got fought over something stupid that ended up escalating into something extravagant, you don't want to bring that into your trading. If anything, that's just going to make things worse, once again. So it's good to be aware of these things if you're journaling that. Not only that, but like I said, a trading journal. All this trading plan that you lay out, it'd be nice to be able to write that down in a trading journal. Not only that, but come back to it once the trade is over and realize what emotions did I go through whenever I was trading. Not only that, but how did you execute? Did you follow your trading plan? Did you break it? And not only that, but you could also see like maybe this support was good, maybe this support was bad. Maybe this charting pattern plays out more than this other trading pattern. And you can kind of keep track of this, and over time, let's say over like, I don't know, a year, you can figure out, this specific ticker, let's say Apple, plays better on Fibonacci levels than, let's say, AMC. That's a good thing to keep a note of, so that next time you come up with a trading plan for Apple, you'd be like, oh, maybe this Fibonacci might hold. There you go. And you have a track record, basically, letting you know how things have been in the past. So one of the things that are a good idea to keep in mind whenever you are trading is if you have to ask someone if it's time to take profits, or if you're going to take a screenshot in order to post it, whether it be in a success tab if you're in a Discord, or even on your own Instagram, talking about your gains, it's probably a good time to get out. You got to show someone that, and it sounds self-explanatory, but there's times that I've been there, there's times that the people that I know that have done the same thing, and quite frankly, the playing it reversing on them, they didn't have a stop loss, what ended up happening, and then missing out on those gains that they should have taken. Also, another thing that's a good idea to keep in mind is that it's not your money until you sell. So even though you're in a position that might be up, like let's say a lot, at the end of the day, it doesn't matter. You have to sell in order to actually have that money to be able to put it back into your bank account. You don't actually own it. If you swing overnight, there could be something that happens that just wipes out all the gains you had. What about it, man? It really ain't yours. Again, it sounds self-explanatory, but it's easy to think that, I got this. Oh, look how much money I got. This is a good position. I did pretty well. And pat yourself on the back. If you'd had a good play or good read news, or if you read the TA correctly, great for you. But you got to realize those profits, man. Another thing that's good to keep in mind is be patient with your winners and be impatient with your losers. Kind of tying with what I just said. I said to take profits whenever they're there, but you can also be patient. Have your stop losses set at a certain percentage. That way you're not actually just breaking even. You get stopped out with the profits. Not only that, but if you follow EMA, follow technical analysis, you see it breaking a key support level. It used to be resistance. Let's say it broke through, and it comes back to test this area. If it does happen to fall back through, whether it be a support line or whether it be an EMA that it's on top of, then get out. That's your tail to tell you that the momentum has stopped. But however, when it comes to losers, whenever it's time to cut. Don't watch. Don't be hopeful. Maybe you'll come back. I can't lose this much. This and that. All these excuses you might give yourself in order to stay into the play. Cut that bullshit out, man. For real. Because that's going to make your port hurt a lot. For real. Also, something else to keep in mind is someone else's risk isn't your own risk. And someone else's position size shouldn't be the position size that you should have. Everything's personalized. So even though you are following a play, maybe of someone else's, or maybe even something you saw on Twitter, in a Discord, their risk isn't the same as yours. So if they got, a contract, and you got a contract, and your portfolio size is smaller than theirs, you losing a certain percentage is going to be a crazy amount worse than compared to someone else's. So always manage your risk and try to personalize that to your account, also to your risk tolerance as well. Something else to keep in mind whenever you are trading or investing when it comes to emotions is your goals. Stick to longer term goals like a monthly or even a yearly, and versus the shorter term periods. Some people try to set daily goals. I want to make this much amount of money every single day. Well, if you make it like that, it's easy to have a red day, and then the next day you're like, I have to make it up. And if let's say you get emotional, start trading, you lose that day too. You're like, this day I gotta make it up. I have to be good. I have to be green on this week. At the end of the day, you shouldn't be looking at it like that. Because it's hard to be able to have every single day of green. Every single day have that $20, maybe $50, maybe even $100. It's hard to be able to hit that consistently. So have a longer term goal, whether it be the monthly again or the yearly, and you could break it up into parts. Where this week, you want to be able to have this amount of money, but don't make it everything. To where it starts dictating the decisions that you make it harder for you to be able to be consistent. Not only that, but seek information for the right reasons. Be eager to learn, to better your skill set, not in order to cover up the mistakes you had. Like kind of talk about how last video I was talking about. Don't blame the fact that you lost a trade because you didn't know enough. In some cases, that's true, especially if you're barely starting off. But as for those who do have experience, at the end of the day, a lot of the times it comes down to your emotions. You fed into your emotions, fed into bad decision making, which ended up causing you to lose. And then you might try to blame it on something else, like let's say you didn't know enough, or this specific trading pattern, that you didn't know beforehand. At the end of the day, it's your emotions, man. It's not that stuff that you didn't know. Also, keep your why in your head at all times. We all have our reasons why we want to trade or invest. We obviously want to make money, but what do you want to do with that money? Do you want to be able to retire early? Do you want to be able to gift that house that you want to be able to give it to your mom? Do you want that new car that you've been working towards? Maybe even to pay your school or pay bills. Keep that in mind to keep you from FOMOing to something, making a dumb decision, going larger position sizing than you should, gambling, let's say on the ER play or something else like that. Keep that in mind. It'll help ground you and keep you from trying to make these simple mistakes that a lot of us have been there before. Also keep in mind that each time you fuck up, it's setting back your goal. If you make these mistakes consistently, each time you make that, it's setting you back from your goal. So let's say you lose $50 in a play. That's $50 that take away from being able to buy that car or being able to get that house. And it doesn't sound like a lot, but that ends up leading to you having to work double in order to compensate for that. Not only that, but let's say your position, or let's say your portfolio goes from, let's say 10,000 to 5,000. Well, now you have to 200% your gain in order to get back to your initial position, when in reality you just lost 50% of your port. 200 versus 50%, it sounds crazy, but that's what your contracts or your shares have to do in order to get back to your initial position. Also review your goals frequently, whether it be weekly, whether it be daily. Some people like to do it before, when they wake up and before they go to bed, whatever works for you. Keep in mind why you do what you do. Not only that, whether it help you with trading, but just, going to the work. Not a lot of people like what they do for a living, unfortunately. Neither do I. So a lot of times I gotta remind myself, why I gotta wake up, why I gotta make this bread, why I gotta do this, and why I gotta do that, man. Stay grounded. It's hard sometimes, and a lot of times you feel defeated. You just need that reminder of why you do what you do, and that definitely helps out. Those are the different things that I wanted to be able to talk about when it comes to trading psychology. I know it was a lot of stuff. Some of it I was rambling on. I apologize, but hopefully that stuff does help. Some of it has helped me, and don't get me wrong, I don't do all this. I'm not perfect either, but I'm attempting to be able to do this stuff while I'm paper trading. Just like how I discussed, I'm going to be able to update y'all on what my trading plan is. But until I do that, just know that I'm trying to be able to do some of this stuff on a paper trading account, because most of my stuff is longer term investing stuff. Trying to ride the rest of this cycle up, hopefully, if we do get that, before heading into a possible recession that we might have. So appreciate you guys. Hopefully be able to catch you out on the next FFC podcast episode.